Welcome to Caching Waves. This is a Elliott wave update on BAT, AKRO, APE, and BCH. So all the videos I made yesterday on those setups, potential breakouts, I am in a position on all four, risking 1% in each one of those, and I'm looking to add to these positions. So I'll show you how I got in, why I got in, and how I took my trade to get the highest position size I could. So let's go to BCH. This was my count yesterday. I mentioned that potentially a 1-2 with a diagonal 1-2 with a flat. And eventual targets for just this third of the third is 981. Then we get our fourth and our fifth. But this trade setup's just for the third of the third. Pretty massive potential move, like 200% plus. And down at the 4 hour, I mentioned this could be several different counts. This could be a 1-2. This could also be a 1-2 in the middle of a flat. It can be many different things. I am not sure which one it is, and I will not know until we get the next wave, right? If it's nested 1-2s, which I propose, then I'm expecting a massive move. If it's not a 1-2, 1-2, I expect this to be some sort of diagonal again, and I might lose out on my trade. But most likely I'd be break even or stopped out in profit. So I'll show you how I got into this trade. Again, had this as a possible 1-2. Have this as a potential fourth wave right now, or again, another 1-2. Sometimes you don't know. It doesn't stop me from trading. My direction is to the upside, so I'm okay looking for the best entry I can get. Sometimes that's all you have is direction, right? And the wave count will eventually expose itself. I can throw on labels on there, but I don't really see a point until I get the next wave, so I can see the reaction I get. So again, this could be a wave 1 to the upside as another diagonal potentially. And my expectation in that sense is we'd make a flat and come back. Like that's the high back here I'm waiting for the breakout at. We could make a flat there and then go, right? In that scenario. So in that scenario, I was like, well, if we make a flat, this is an excellent entry because this was near the 1-to-1, near the 1-to-1 of this being a correction. If that makes sense to you, I hope that makes sense. We got this really nice move to the upside. So in this wave, when it was dropping yesterday, I was looking for the 1-to-1 extension of this move and a reversal. And how I play reversals is I let the market come to me. So the way I took this trade and all three of those trades was I triggered in right above this wave here. I saw this moving. I was like, okay, I'm not very confident on that. We haven't broken any resistance on the three minute. So I triggered in on the breakout above this, and my stop went to the previous pivot right here. I didn't put my stop at the low. I put it at this pivot. Reason being to get as much position size as I can. I get more position size like this rather than with my stop at the low. Almost double, right? So I only do this in these situations where I say, okay, there's potentially a pretty big reversal here. I'm going to put my trigger there, stop loss here, just 1%. I don't know what's happening yet. I was pretty confident when we were getting this sideways action. Okay, off we go, right? But right now my stop is at 297.23. My entry was right one tick above this, above the shelf. And what's nice too is if it rolls over, I didn't just buy this because it could easily just get rejected and roll over for another one. I'm not in the trade unless we come to that area, right? But very nice entry. Currently a risk reward if we reach that target of 140 to 1. And you do the math. If depending on your trading account, I'm not going to tell you what mine is, but if you risk 1% on, say, you had 10K, $100, that's 140. It's 14,000, right? $100 to win 14,000. Not bad, right? And how you can leverage up in these situations, which I most likely will. I have to fix these fibs. I just took it from there. I'm going to move my stop to just past the 618. So this one will probably be break even if I get stopped out. It's exactly how I traded dog with hat. So yeah, I'll move my stop to just past the 618. It'll be pretty much break even at this point. But you can see we have potentially 5 waves complete to the upside. Is most likely a diagonal. And looking for a pivot right in this area. So that one's going to be free. And how I'm actually going to leverage up on this one is very similar, because this could roll over itself, right? I'm not sure. I don't know the bigger wave count yet, but I do expect the direction is up. So you can either leave your trade at break even, let it run, or try and add to your position size for that further upside target. And that might take that 14,000 potential profit on a $100 account to, say, 23,000 potential, right? So I now have an extra $100 risk if I move my stop to break even to throw at this. And you can just buy in this area if you want and raise your stop to where it's just a $100 risk again. Or alternatively, what I tend to do is I have to remeasure this, but I'll take a breakout trade again where I get triggered in above this area, above our wave 1 and 2. Because if this is a third, it should take off, right? And if we don't come into that area, I just get stopped out at break even. But if we get another low here, peek back in, you obviously have to readjust this again. And the way I set it up is wherever my stop low is at the pivot, that's the position size I'll add. So if my entry's here, my stop's at this last pivot. So I can calculate how much more I can add for that $100 risk I've now taken off the table. And if we get one more low, obviously it'll be this pivot, not this pivot. But again, I won't get triggered in until we break that and stop gets raised to here. That's how I did it with dog with hat. I was able to like 4x my position size on the way up from my original entry, but it's just so important because of your risk reward, right? You can really leverage up quick with this same $100 risk. The downside is if you get stopped out, you lose that 100, where if you just move it to break even, there's no risk, right? You have to decide for yourself what's more painful. Is it more painful to miss out on the extra money you could have made, or do you accept, okay, I'm gonna throw in that $100 risk? Okay, so also I want to show you how bottoming patterns can happen. And lastly, if this was actually a diagonal, I would expect this to turn into a flat up at around the top, target the 1-to-1 here, which could get stopped out that trade setup, right? So you kind of have to weigh the risks and rewards. I know that can happen, or we can just go. So I don't have a ideal wave count, obviously, but I have my direction to the upside. We can see APE. Pay attention to the bottoming structures. You can see BCH was probably the best bottoming structure. It was more impulsive, but it's interesting to see all of them, right? All these were also at between the 50 and the 618s of the last move to the downside, close to 1-to-1 extensions, which is why I took them. You can see this one was the 50. That was the 1-to-1, just came up shy. But you can see the bottoming structures. This one, 3 minute. closer. So this one, I took this breakout right here. Stop was at the last pivot as we broke down at the 3 minute. So stop was right here and we're just moving up, right? But I like to, for my own education, I like to watch each bottoming structure as it happens so you can kind of know what to expect. Do you get an impulse or do you get a diagonal? Diagonal will obviously be a little more worrisome, but that's how I did that one. Triggered in here, stop was at the last pivot. I didn't do it at the low, I did it at the pivot because I was expecting it to go. This is just my style. There's no right or wrong ways. Each way just has its pros and cons. Obviously, if you put the stop at the low, you leave the most amount of room for a structure to happen. I prefer buying breaks of structure with my stop at the last pivot on reversals because it allows me to get the largest risk reward. That's why I do it. And I accept whatever happens, and that's why you hear me say I might have to get at it once, more than once. I might have to get my entry, and I accept those losses because I will get it all back just by one going my way, right? So same thing. That's my stop at 190, and I'm gonna move my stop probably just past the 618. So this one, it would be a slight loss if I get stopped out. Acro, again down at the 3 minute. That's our high we're waiting to break out of. This one was a little bit further away. I bought this breakout right at this area. Stop was at the previous pivot, as you can see, the last significant pivot. Reason on this one is I saw this could be just get a fifth wave here, right? It looked like an impulse. And if we came back, I was considering buying in this area, stop at the low, but we didn't get that. That's why I have that trigger order up there. We just ate through it, right? So again, most likely a diagonal, as you can see. I did not know that at the time, but I knew the direction was most likely up. So as of now, these pivots have to be re-pulled from yesterday. I'll probably just put my stop to break even. It's now at the 618, and again, I can leverage up on this one. If we get, it's a nice looking diagonal. If we get a pull back, I can take a trigger entry above this area. Stop goes at the wave too low if this is a 1 and 2. So I have an extra $100. I can basically, on that 10K, for example, I can basically double my position size, right, on the way up. And again, all of these are like similar to the other one, 140 to 1 risk rewards. And basic attention token. This one's really going. Again, we are at the 50 and 618. I saw this as a double zigzag potentially. Paying close attention what happens at the 50 and the 618. So down at the 3 minute here. This one was the scariest of them all. I took my entry right here and my stop right at the previous pivot because I saw this really going. So this was probably the best position size I have out of them all, but that was my entry. And that's where my stop is. You can see at 273.83 in the bubbles. And this one I'll just move to break even. It's most likely at a 618. Yep, so all these are free trades and I can choose to leverage up on all of them if I want with my original risk. And turn like 130 to 1 risk rewards to like 200 plus to 1 risk rewards, right? And you can imagine how if you do this at every pivot, you don't have to be right that wrong or that often. I would prefer to do this every time, be wrong like 4 times, and it still go. You will make more than just taking the regular like 10 to 1 risk rewards. But the downside is you really have to be paying attention and you have to be obviously pretty confident on the pivot, and I'm quite confident on this pivot. So we'll see. It looks like all of them are at break even now, and I will probably double up on those positions, but only on breakout trades with the stops at the previous pivot. And I'll use the 15-minute for the stops at those pivots. All right, guys, that's the last video for today. I have a very busy day. I'm going to be watching these trades, trying to add them on, but I have some family stuff in the afternoon into the evening. So this is it for this one. I do have a list of other ones with the same sort of setups. I'll probably just do a video tomorrow with a bunch of them in the same video because there's so many similar to this setup. But one suggestion is don't trade too many, because as you can see, you know, Bitcoin moves the whole market. So when you say, oh, I'm only risking 1%, yeah, but everything's moving the same way. So every trade you take is like basically the same trade, right? If Bitcoin takes off, they all take off. If it dumps, they all lose. So I would suggest just focusing on the best, you know, 2 to 5 and leaving it at that. Kind of ignore the rest. All right, guys, that's it for this one. Thanks for watching. I'll see you on the next one.